Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw a failure in the S&P and in the European markets, and ES sold off on above average volume. So at this point, heading into the open, the sell side is more dominant. We have pre-market resistance at 94 quarter to 95.75, and if the market is truly weak, then it should actually hold below 94 quarter to 95.75. And if it continues to hold below that pre-market resistance zone, then we could quite easily get a move down into the 83 to 86 initial support and potentially even down towards 74.5 to 76.5. That's something that we'll have to gauge in real time, but right now the volume is running at about 140%, so it's very much above average. And typically when you have that type of volume, you end up with a relatively wide range. So the range potential in the event of a continued sell-off could easily take us down towards the 74.5 to 76.5, and in the event that this turns into a trend type move, then it can be even lower. So heading into the open, the short-term bias is bearish, especially below 94 quarter to 95.75, but above that, 97.75 to 2100 quarter is a very important inflection point, and that's still an area where sellers could be active. On the downside, like I mentioned, 83 to 86 is the first inflection point. It's still an area where buyers can be active, but if we are selling off on very weak internals and consistently negative momentum, then it's probably a good idea to skip trading that zone on the long side, because ES could actually expand the range down into the zones below at 78.75 to 79.75, which is a minor area of support, and 74.5 to 76.5. So, right now the context is that the market is still trading within a balance, but we've seen a pretty strong rejection from the top of that range. And if that rejection holds and that failure idea holds, then we could actually go down and test the bottom of the balance at 74.5 to 76.5 and potentially even 65 to 68. Now, this is a very good zone to fade on first test. It is the bottom of the prior 3-day balance that we broke out from, and by that point ES would be very much exhausted into the zone. So in the event that we get a stronger sell-off and we go all the way down to 65 to 68, this is an area where the selling could shut off and we could get a relatively decent bounce on the day time frame. But right now the bias heading into the day is very cautious. It's short-term bearish. We're still open to the bullish scenario, but only if we get a strong open drive to the upside and the other markets really start rallying as well. Right now, that's not looking to be the case. It seems like we're going to continue going down, but if we start seeing some really strong upside momentum, then obviously we have to tone down the bearish view and take that real-time information into account. But based on all the indications that we're seeing right now, it seems like a pop back up into the 95 area and the 97.75 to 2100 quarter is going to be a pretty decent spot to short the market on first test, and then from there ES still has potential to just balance in a range, and if that balance breaks down, then 83 to 86 and the lower support zones would come into play. We'll also keep an eye on relative volume to make sure that it remains above average, and if it does, then we know that there's some decent range potential on the day. As far as the econ calendar goes, we have the Philly Fed survey at 9 a.m. Central Time. Aside from that, no major economic catalyst, and in the short term, the sellers are currently in control. So those are the main ideas heading into the open. Let's see if the sell side can maintain control below pre-market resistance and initial resistance, and we'll take it from there.